What is going on YouTube? It's Sank. We are back with another one. Now in this drop, coming at you guys with a couple of plays and bring to attention. But before I kick things off, if you'd like to help out the channel by hitting that like button because it keeps the show rolling. Alright guys, so we're moments away from kickoff in these markets. That's Tuesday morning this time, and you already know in this drop I'm looking to make sure you guys are moving in the right lanes to continue hitting success with me in these markets as we move through the second half of the year. But before I get to those plays, I want to let you know earnings season is upon us. We're kicking off middle of this month, led by some of these financial plays. So a ton of plays are going to start to release their Q2 results. Now I'm going to give you guys a heads up. On one side, we're going to start to see a lot of our plays moving up a gear. So we're going to get our just rewards as investors. And on the other side, earnings season always brings this volatility, but with that comes opportunities, especially if we get sell-offs, pullbacks in quality plays after they post up good earnings. And you guys know over here, we always capitalize on that. Now, by way of example, one of the last plays that we pulled that maneuver on was ticker symbol SNAP, that snap. That's been a couple of weeks that I've mentioned that play on the channel because they're moving like clockwork for us. We scooped that one up when they dropped down to the mid 50s or low 50s off the back of quality earnings. So it was an illogical movement by the market. And now we've seen that rebound, and now we're looking at a $70 play. So we're always prepared to get into the trenches with these quality plays because it's easy money. So I want to let you guys know we're going to be on full hunting mode for the entire month to ensure that we continue building our portfolios with quality plays at the best prices. Now we've already kicked off earnings season in style with ticker symbol HITI. They post up quality numbers and they've just set the place for the rest of the plays to follow through. So I'm expecting big things this earnings season. My excitement levels on 100 for what the market has in store for our family of investors. Now that being said, in this one, as always, I've got a jam-packed one for you guys, looking to make sure you guys are focusing on the right plays to ensure that we add quality depth structure to your portfolios so we hit success moving through the rest of the year. So let's run the first one. So we've got ticker symbol WFC, that's Wells Fargo. Now, this isn't a new play to us because we've been accumulating this one right through the 30s up to their 52-week high, which clocked in just below $50. Now recently we've seen this one cool off with the rest of the financials come down in price, but it's an opportunity for us to get in on the play or back in on the play at a cheaper price point where they're at right now in the low to mid 40s. So I'm gonna give you guys a heads up on this one because this is gonna be an undercover reopening play. Now all the plays you guys pick up in the markets right now are focused on should be beneficiaries of reopening because it's gonna be a major theme for a lot of stock winners as we continue through the year, either on the consumer side with increased spending or on the business side with increased activity. And Wells Fargo is set to benefit from both sides. Now, if you check out that stock price, currently standing in the mid 40s, this one right now is just residing in the lower end of their historic trading movement, okay? And we've seen this one historically in the 50s, seen this one in the 60s, and this is a play that is set to go from strength to strength. This is already a profitable business, about to become even more profitable as we continue through the rest of the year. Now, there's two major themes also going on here that should give that stock price momentum. One is dividends, so they're increasing their dividend, looking to double that. The second is share buybacks that are going to be rolling out over the next couple of months. As I say, that's going to give that the push it needs to get into the 50s, potentially even the 60s. So if you already don't have this one in your portfolio, we're looking to increase your position in this one, look to do so over the next couple of sessions at good entry. Now we saw this one come down on Friday's session just under a point. So if we do see any more downwards pressure in this is one you want to be adding to in weakness, okay? So as I say, this is a solid bet for continual returns as we move through the rest of the year. Let's get to the next one. Next up, that's ticker symbol HITI, that's High Tide. Now what we have on our hands here is a case of daylight robbery on Wall Street because standing $7.65, this is what we call an undervalued, overlooked play, but we always capitalize on those over here. I told you guys about Snap at the beginning of the drop. Another that we've done the same on is Revolve. After quality earnings, we saw that one come down to the 40s. Now that's standing $72. Another one for you is Pinterest. We saw that one come down to $55 after quality earnings. We caught that dip perfectly. Now we're looking at an $80 play. So when you're prepared to get into the trenches with these quality plays, as I say, it's easy money. So they're buy right now where they're at in the mid 7s. So let me put you guys on some game now. If you're like me and you've got a fully built out position in High Tide, currently they're around 7% of my portfolio, and I'm not looking to get any more long-term exposure to play because I'm looking to keep my portfolio diversified. I can still make the most of that lower price point by adding a short-term position. So I'm looking to add around 25% to my position and then selling the rip. If you look at that stock price, when you see this one make a low, you see it spike up. So when this one makes this next spike and lands somewhere in the region of $9.50, $10, I can sell the rip, take that 25% out of my position, rotate it into another play that is on the low. Leave the rest of my long-term position to run to double up, triple up in the medium to long term in this play. That's how you maximize your returns in this game. Just speed up the process. So going forward, we can expect more acquisitions from this one, open up more retail outlets to grow, scale, and solidify their position within the game. We have a big potential play on our hands here. What you guys need to do is detach from the short-term stock price movement and the business. We know the business is firing on all cylinders, grew 100% quarter on quarter. That short-term stock price is just influenced by various factors, and we could just capitalize on that by getting in, catching the dip. When it makes this rebound, that's how we make great returns as investors. Let's get to the next one. The next one I've got for that's ticker symbol SONO, that's Sonos. Now if you check out that 3-month chart, this one isn't too far off their 3-month low. If you check out the 1-year chart, this one currently is sitting at that longer term support at $35. So a good entry can be made here on this one over the next couple of sessions. What we have on our hands is another big potential play unknown to retail investors. The institutions know about this one, the ownership is high, the hedge funds, the money managers are in this play, and they're prepared to hold this one for what they've got coming in the future. And we know they've increased guidance, so Q3, Q4 should come in hot for the play and could act as a catalyst to get this one moving up through the 30s back into the 40s. So again, this is another one for you guys to consider, add to your watch list. Again, we might get some volatility in the markets next week for growth plays. So if you do still see this one come down into the lower section of the 30s, then again, make good entry on this play, because as we close up the year, I'm expecting this one to finish at their 52-week high, which clocked in at $44. So there's upside on this one to be made for those of you who are prepared to get in on the quality play, again, at a cheaper price point. That's how we always win in this game. So if you've been rocking with the channel, you know what time it is. Craig says, great videos. Wish I found your channel earlier. With some of my more successful plays, I've been creaming off a little profit, then entering a limit order at a lower price. What do you think of this approach as a rinse and repeat? So to wrap this one up, I'm going to share some of you guys. Now, this is a great question, so we're about to go in on this one. So similar to what I was saying about high tide, I already have a fully built out position in that play, but I'm looking to take advantage of that cheaper stock price, get in at that cheaper entry, and then sell the rip when it moves up. Take the short-term profits and rotate into another play. Now, I'm going to cover off with you guys a couple of things. The first is knowing when to sell out of the play, take that position and move to another play. And the second is what play to move into, where to take your profits that you've just netted from that play. Okay, so first up, in terms of when to sell out of the play, you guys got to realize when you start seeing these plays move up 25% in a very short period of time off the back of weak catalysts, alarm bells should be ringing that it's an opportunity to sell the rip at that point in time. Take a position of your holding out, like Craig was saying, and secure the short-term win on the play. Now, typically, if you have a play that is heavy on the retail side, so a lot of retail investors, you're going to get a sharp pullback, or it's likely you're going to get a sharp pullback. That's where you get a lot of volatility in the markets with these retail focused plays. Another is these plays with that sky high valuation. So if you got plays with a price of sales of 25 times, 30 times or plus, there's a high likelihood when you get that movement upwards, that sharp movement upwards of 25-30% in a very short period of time, you are going to get a lot of profit takers, a lot of sellers. So it's an opportunity for you guys to sell out at that point, secure the win before a lot of these returns that you could have had are basically returned back to the market. Now, in terms of where to rotate those funds, you mentioned rotating into the same play. The best thing you can do is move those funds into another play that is down at the moment, because it could take a while for that play to come down to a good entry point. So if you have a play that runs up, it could take a good couple of weeks, a good couple of months for them to really see a sell-off and come back down to an attractive entry point. Why not take those profits and move to a play that is already on the low that could spike upwards very quickly, like a Penn National, for example, like a Caesars, like a Sonos. Those types of plays are down at the moment. They could pop very quickly in the market. So that's just how you guys play this kind of rinse and repeat type of movement. So it's an opportunity, as I say, for you guys to speed up the returns in your portfolio, do a little bit of portfolio management, also have a little bit of fun with it, and secure several W's along your journey Alright guys, that wraps up for this one. If you've got any questions for me, leave them down below and I get back to you. Honestly, I appreciate you guys. On your way out, do light up that comment section for me if you're new, join the movement, and I'll catch you on the next one.